Hey everyone, welcome back to the channel. Today I'm going to share with you one of my most important habits that has completely transformed how I manage my finances, not to mention my credit, is monitoring my credit. Now, whether you're building your credit or protecting yourself from identity theft, this is a step you cannot take. And I'm going to tell you why. Now, first of all, there's a lot of conversation today in person on the internet, as I talk to folks every day as well, about monitoring credit. Who do they use? Who's right? Who's accurate? Who's not? So on and so forth. And I think a lot of the confusion has become because most folks don't understand the ins and outs of the credit reporting industry, market, and process. But I'm going to break it down for you real quick. Um, First of all, credit monitoring was designed, it was intended to compensate folks who had been a victim of three or more, but the main three credit breaches that happened in the last 10 years, namely Experian, Target, and Home Depot, which, by the way, I was in all three of them. I received letters when each one of those breaches occurred, and they sent out letters to everyone and they said, your information was involved in a breach, was stolen in the breach, and as a result, I was offered free credit monitoring from those entities, supposed to be for life, but they were really only for a limited amount of time. But so I was named in all the three. Now, fortunately for me, I did not much came out of that. But I've ever since then I've had credit monitoring, and I've switched a few times. Currently, I use Smart Credit, and I like Smart Credit, but in transparency, I did partner with them, so I do use Smart Credit in my credit repair business. I recommend it to my clients, but it's a good reason for I recommend that. But I'll get to that in a moment, that as well. But let me go back to explaining this. Whether you use Smart Credit or anyone else, the important thing is that you use a credit monitoring company that, number one, is using either FICO 8 or Vantage 3.0 for the scoring model. And that's important because that's pretty much what most lenders are using in their credit decision making. And that way, what you're seeing when you're monitoring your credit is consistent with what they see if they ever pulled your credit for a credit decision. You apply for something and they look at your credit, and you won't see scores that are way out of a line with what you use. Now, the one exception to that is mortgage lending, because mortgage lenders use a scoring model, FICO version number 2. It calculates score much differently from the other scoring models. Namely, it's much more conservative. You get fewer points for things. It counts more public information. So that typically the difference between what you're seeing on your credit monitoring with FICO 8 or Vantage 3.0 and what you would get from a mortgage lender using FICO 2 would be somewhere near around 50 to 55 points different. So for those of you out there who have ever did apply for pre-qual with a mortgage company, and they came back and told you scores were much lower than what you were seeing on your Credit Karma or anything like that, it's not exactly because Credit Karma is bad, wrong, incorrect. It's just that they're looking at your credit file through a different lens than the mortgage companies do, and it's going to be much more conservative, much more restrictive. And in short, you're going to have lower scores with FICO 2 than you would with anybody else, period, point blank. So it's not so much, and I'm no fan of Credit Karma, but I just like to be like you folks to know the accurate and true reason for things. And so, but I do have some issues with Credit Karma per se. First of all, I know a lot of folks use Credit Karma because it's free. Now, of course, we all know you get what you pay for, but it's not in terms, and the issue with Credit Karma is not in terms of the accuracy or legitimacy of the score. It's the fact that In that free offer that they give you, you only get one or two scores, but I believe you only get one, and you're getting one directly from Experian, and then you're getting a secondary bureau from TransUnion. But Equifax is not offered at all. I'm sorry, I believe it's offered, but you have to pay. And of course, most people feel like, well, if I'm getting X amount for free, why should I pay for the rest? Well, in essence, you're only getting 66% of your information, or or 2/3, because when you're monitoring your credit, it's important that you monitor all three bureaus, TransUnion, Experian, Equifax, because not all creditors report to all three. Not all collection agencies report to three. Sometimes when errors come about, they may only show up on one bureau or two, not necessarily all three. So when you're monitoring, you need to monitor the whole thing. It's just like if you had security cameras around your house, you want to have them in the front and the back, not just in the front or the back. You want to have a full picture of your credit file at all times, and so that's what's important there. But again, whether you use Smart Credit or any other one, it's important that you're seeing all three bureaus, and that your focus of monitoring your credit is not on the scores. The focus is on the information on your report. You want to be looking to see that there's nothing there that shouldn't be there, and that what is there is accurate and true. And so, going back to the credit monitoring requirements, back during the data breaches, credit monitoring was created because, with folks being at risk due to these data breaches, and the government mandated that the companies that weren't protected said you have to offer something to consumers who might be a victim later on if their information is sold and somebody takes out things in their name. So the credit reporting industry created credit monitoring as an early warning to fraud and identity theft. Now, of course, here in America, us being innovative as we are, they said, well, we put a lot of time and energy into creating this credit monitoring service. How can we expand on that? And so, and initially, the credit monitoring didn't come with any kind of score results. But then they decided, well, let's create a way, let's create a scoring model where we'll actually get scores, and then we'll charge folks for that. But most folks wasn't interested in that because they didn't see any value. So the credit monitoring industry, the players that came along, decided, well, let's make the score, let's make some of it free, and then we'll make it partially free, and then hopefully that'll encourage them to pay for the rest. But then all the marketing efforts were around, the focus was on score, 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 score. So they say, get credit monitoring, boost your score. So they created that sort of message, that, and focus would be on monitoring your score, but you should be monitoring your information, because as I tell clients and prospective clients, the goal is to make sure that your credit file is at its best. I use three different adjectives to describe it. Sometimes I'll say credit health, I'll say credit strength, or I'll say credit health, credit strength, and credit quality. That's the third one that I usually say to them, depending on what's sort of comes off the tongue at the time. But that's the key, is to watch what's on your credit, making sure that everything is true and accurate, because the Credit Reporting Act says that creditors and the credit bureaus are responsible for reporting only what is 100% accurate and true on your credit. So a big part of what I do is, when folks' credit is challenged due to things like errors and illegal items, things that are not true and accurate, we either get them updated to be accurate, to reflect the right information, or have it removed because it's illegal to have it on there. But that's a different story. I wasn't talking so much about my service, but I was talking about the importance of credit monitoring. So, how does credit monitoring? How should you properly use credit monitoring? Well, number one, um, well, before we talk about that, I'm gonna just talk about why is it important in the maintaining your credit. If you're on a mission, your journey trying to get your score as high as possible and get to 700, 750, 800. So um, think about it this way. Your credit, start with the basics. Your credit report is like your financial report card. Now, granted, your credit doesn't tell anyone what your income is. It doesn't tell anyone what your assets are, but it does tell people. We can infer certain things because if you got high credit limits and you're making ample payments, if you're making two and three, four, $500 monthly payments on your credit card because you have high balance and high credit limits, you're doing big spending. There's an assumption that you have a high income to pay for that. So but the thing is, though, your credit affects everything. So going back to the importance of the credit report and the credit monitoring, because your credit score, and then the credit decisions that are made by human beings who are looking at the actual report, not just the score. They decide whether they're going to approve or deny you, of course. But even beyond that, even if you're getting approvals, it's the difference between getting a low score and a high score, and low interest rate and a high interest rate, and then therefore making your payments higher or lower and making your financing more affordable. And then having, if your payments are lower, you got less payments to make for the same thing. That's more money you could potentially save and invest to build your wealth. Everything from your insurance payments, mortgage and home insurance, as well as other perks and rewards, are all dictated by not just the credit score, but the credit report. Because in the mortgage space, underwriters like myself, because I am an underwriter by trade, by profession, we don't just look at your score. We look at your pay history. We look at the type of credits you have. We're concerned about collections, old and new, and recent judgments and things like that. All of that stuff that is on there, yes, it impacts your score, but it also gets looked at as part of the decision, and it tells us a lot about how you manage your credit, how you manage your financing, and unfairly or fairly, sort of like we kind of infer some things regarding your judgment. And so that goes into play with employers because they look at that in certain job positions. If you got bad credit, they won't consider you for the job because they infer that you got bad credit because you have bad judgment. You're not handling your things, so they don't know if you would be someone that's a good fit for a particular position. Um, I even know folks who credit is a factor in military security clearances. I had a client who had his security clearance was in risk of being revoked because some credit issues came up, and he hired me to take care of them. Subsequently, I did my research and we got them removed because they were in fact not his. And because he wasn't monitoring his credit, he didn't realize these things had occurred, and had them addressed. And they brought it to his attention through because they were monitoring his credit, but he wasn't monitoring his credit. So it's important that we do that because there's a lot of factors that are affected by your credit score and your credit file, not just your ability to borrow. Plus, the important thing with credit monitoring is that identity theft that I was talking about before, because the the sooner you find out about errors and identity theft, the quicker you can resolve them before they do damage. Because if you had a 700 credit score, then something from identity theft pops up, now you instantly go from 700 to 600. um, and then after that you might end up going to five or 400, and then once you get all that resolved, now you got to climb out of the basement of 450, 500 to get back to 700. Once you remove all these things, it's better is I guess it's kind of like the metaphor, it's better to stumble on one step than fall down the whole flight. So that early warning that credit monitoring was intended for in the beginning, it still should be your primary focus when you're monitoring your credit, because you want to keep an eye on that suspicious activity and head things off. Okay, now Let me tell you a story about my run-in with identity theft. Now, granted, it was a long time ago. It was back in the 1990s. Yeah, I know the grade tells my age. Um, and so essentially, what happened was I had I had applied for a car loan in '86, and then the initial one they told me that I didn't have enough credit, and so they basically said they couldn't finance me. Now, granted, I graduated from high school in '85, did a year of college at the beginning, and then in '86 I started working, but I didn't have any credit at all, so I couldn't do that. Then fast forward, 1991, I was able to get a mortgage that when I bought my first home finance. It wasn't my first because I had made cash purchases on less expensive homes for investment purposes. But my first home I lived in, I got a mortgage in 1991. Everything was fine because I had developed some credit through a credit card and a couple of signature loans with my credit union to establish some credit. So I had some there. About 4 years later, I went to apply for a second mortgage on another property, and my credit score they declined it. And so back then it wasn't easy to get credit feedback on your report. You just got denied, and then there was no requirement back then for credit denial, so they didn't have to send you. They just sent you a letter saying you were denied, but they didn't have to give you any details like what score you were um, rated on, and so on and so forth. And so I called them, but they told me, they said, "Oh," and I said, "No, my score was way lower. It was way higher than that. It was like 572, if I remember correctly." Well, they told me, "Oh, there was some late payments and whatever." And so I'm like, "No, that don't make sense." So they said, "Well, you can contact the credit bureau and get a copy." Annualcreditreport.com did not exist. There was no Credit Karma. There was no Smart Credit, no Identity IQ, or any of those places. So the only way you could get a credit report was from the credit bureaus directly. It took me about 18 months to finally get my credit report. And then I discovered that there were accounts that I'd never had. There was a car loan from a bank that I didn't even bank with, never applied for a loan with them, whatever. The car payment that I had when I bought a car in 1988 was through Nissan Motor Credit. So the bank that this auto loan was through was not mine anything. Well, it took me a bit of investigating because again, back then it was tough. I finally found out that there were several accounts that were reporting on my credit were from someone else with the same last name because Rainey is not as uncommon as you think, and somehow other folks' accounts, bad accounts, got mixed up with mine. Well, it took me about 3.5 years to finally get all that stuff cleared up. Had put notifications on there. They didn't have freezes back then, but I could put a note. I sent them a letter. You actually have to send letters back then. Again, we're talking about mid '90s, where they would say, if someone applied for credit, I mean, not apply for credit, but for the credit reporting folks to make sure they double check Social Security number, things of that nature to make sure. But it took me, if I finally got everything off of there around 98 or 99. And in that meantime, I had bought a couple of more properties, but it was always a hassle. And then with that, but I slowly got all that stuff removed and fixed my credit, and it was then accurate and true. And then since then, I haven't had any problems. And then I just set about doing some things. And then when I got into banking, um, as continuing ed, we had an opportunity back then. FICO used to teach a class on how to read credit reports, how to understand the credit reports, and so I learned a lot about how FICO works because I mean they were the big dog back then. They still are the big dog, but they were pretty more or less the only one. Everybody else was minor. So I, through my career in banking as well as my personal journey, I've come to learn about the credit reporting business and how it works very intimately, and I've used that knowledge and experience to fix my credit as well as many of my clients. And so that's basically how that goes. But more importantly, is by regularly checking your credit report, it'll help you catch errors like that sooner. Now that we have these tools, we have the ability to monitor our credit. You won't have a 4 year old surprise like I did. Um, but if you watch it and monitor it early, look at the activity, and you can catch errors and which sometimes are early signs of identity theft. And then by reporting that and getting everything together, it can end up saving you thousands of dollars, which a lot of times we can get if we can prove it's identity theft. The money part we can usually get off relatively easy, but it's still stressful. I mean, it's the reason why I don't have no hair. But it gets tough once all the damage is done, because of course we know, like anything else, it always takes more effort to clean up a mess than it does to make it. So that's that. Now, again, I said my go-to tool for credit monitoring is Smart Credit. Now, why? Well, first of all, I feel that Smart Credit is a quality service. They have many, many tools in their program that are included with the monthly membership for credit monitoring. There are tools there, obviously, notifications for um, suspicious activity, but they also have a score tracker that helps trend you. They have score boost and things like that. Now, the score tracker score boost is intended to work something like a rapid rescore type tool, but it's not really rapid rescore. But the I is a lot of loan officers out there. If any of you guys are listening to this, you guys know about rapid rescore. And the way rapid rescore works is um, if there are minor things on one's credit that can be corrected to try to boost the score, it the system, you can plug it in, and then it recommends if you pay this off and do that, you may get a score increase of this amount. Well, Smart Credit has a built-in item like that. It's not rapid rescore, of course, for my loan officer guys, but it works very much like that. So as a layman person who wants to know what should I do to fix my credit, if you're working on your credit on your own, it can give you recommendations on what to do and what you and sort of project what the potential boost to your credit is. Now, it's not perfect by any stretch. They make no promises because they can't, but it's a tool. And then there's also the score tracker, which shows you trends up and down with your credit and with your use of your credit. And then, of course, it gives you notes on credit utilization, which is ultra important. We want to stay at below that 30%. I recommend 15 to 25% for your credit utilization to maximize your credit score. But again, monitoring is more for quality, strength, of your file, and by having high quality information on your credit, high quality payment history, high quality credit usage, strong payment history, and the like. No matter what score model your score is looked at, no matter what you're applying for, with quality information and a quality file with good payment history and so on and so forth, what you're going to have a good score no matter what, because everybody, it's just a matter of how high it's going to be depending on the scoring model. So, but with credit monitoring, here's one thing, another reason why I use Smart Credit. With your membership with Smart Credit, you automatically get, at no additional charge, a $1 million fraud and identity theft insurance policy. Now, if any of you have shopped around and you've seen other programs that like LifeLock and ID Seal, where they have extensive credit monitoring and then they offer a insurance policy as part of their service. They're twice the price of what Smart Credit is, yet but with a similar coverage. So that's an important thing to do. So again, another reason why I use LifeLock. I use LifeLock in my business with my clients, and I use not LifeLock, Smart Credit. I use them personally, and I use them in my business for my clients as well. But again, making sure that whether you use Smart Credit or not, make sure you're looking at all three bureaus and that you're monitoring all three and making sure that things are accurate. And they should be, and accounts should be accurate across the three bureaus, because that's also an issue too. Is like you have $1,000 account, and then Experian says it's 1,200, Equifax says it's 900, Experian says it's 250, or sometimes zero. So it's important that things are accurate and true account across all three bureaus. So, um, now let me show you that. Yeah, we'll do that part. Let me show you how I incorporate the credit monitoring into my routine. Okay. Now I don't look at Smart Credit every day because I have the notifications on, and that's important. So if you have the notifications on, you don't have to check it as often, but you should check it. I check mine once a week. So I glance, make sure everything is okay, because all my creditors don't report at the same time of the month. So even though the report refreshes every 30 days, you can get updates if you turn on the notification. But I always log in at least once a week and review for any changes, anything weird going on. I look for any new accounts that I didn't authorize, which these days I don't really apply for anything. I got pretty much everything I need. If I look for any errors with payment history, balances, any other unusual activity like that. Now, for me, it takes 10, 15 minutes to go through and look at all the accounts. Now, me, I have nine personal credit cards. I have 2 lines of credit. I have and a mortgage, and I have an automobile loan that's almost done. So not a lot look at it. I mean, a handful to look at as an active accounts. But again, it doesn't take long to look and see if anything's wrong, weird, out of place. But that 10 to 15 minutes is worth it, because it'll save me tons of trouble if I catch something early. And then that might take me maybe if it takes me a couple of hours to get rid of something. And I'm basing that on my work with other folks who have had identity theft to go and report things, like, because it's important when you suspect identity theft. Number one, you should file a police report. That's one. Number two, you should file an identity theft victim report with the Secretary of State, because they have a database for that. You can also go to the Federal Trade Commission and file an identity theft report there as well. That'll put you in a national database. And so those things will help. They go a long way towards protecting you. And number two, by having all those things laid out, that's part of the documentation that you would use when you're going to the credit bureaus and say, I'm a victim of the identity theft. These accounts, whatever's fraudulent, these accounts are not mine. I've reported them and I've named these as fraudulent accounts. And so then what they would do is that gives your claim of identity theft 100% legitimacy in the eyes of the credit bureaus. They won't ask you any other questions. They will remove all the questionable accounts. They will go to the creditors and say, consumer reported these as identity theft. Check into these and show us how you extended credit, because obviously if it's identity theft, they didn't do a good enough job of determining who the person was that opened up the account using your name. If they got an ID on file, they would have to provide that, and if the picture on the ID is obviously not you, then it's fraud. And then they have to eat that, because essentially by reporting the theft with the police and registering with the FTC and your state. If you're not in Ohio, most states have one. By doing that, and I also recommend going to the IRS and set up the security pin, because people, they've been known to file income tax refunds fraudulently to get a refund in your name. So I recommend you go there as well. But by doing those things, it puts the burden of proof onto the creditor, and it's less headache for you. I've had clients that they've done just that, and the difference between me getting stuff off their credit with the police report is a number of days versus weeks, not doing it that way and then having to go back and get it. So that's important as well. But that habit of checking every day just goes a long way. And again, it's not just for building your score. Obviously, if you're working on things to build your score, to correct your score, to clean up your credit, and so on and so forth, yes, you're going to look to see the items disappear. But of course, yeah, it's nice to see the score go up too for validation. But remember, quality of report takes precedent over the score itself. Because if you fix everything on the credit, the scores will come. So if you're not already monitoring your credit, now is the time to start. If you're monitoring your credit, if you're only monitoring one or two bureaus, do whatever you need to do to start monitoring all three. Is that much difference? Because I've seen people say, hey, they told me I had this account, this collection, this thing on my credit, and that's not on my credit report, but they were only looking at one or two bureaus, and sure enough, it's on the third bureau that they never looked at. So again, I like smart credit, but no matter who you use, make sure you're looking at all three bureaus. Make sure that the credit monitoring service that you're using is using either FICO 8 or Vantage 3.0, because there are earlier versions of FICO, there are earlier versions of Vantage that that most major lenders are not using anymore, but there's still some out there. There's still some credit monitoring companies out there that are using older versions because they haven't paid for the new version yet. And so as long as it's a FICO 8 or Vantage 3.0 credit scoring model and you get all three scores, doesn't really matter, um, be concerned about who's right, who's wrong. Because as I tell folks all the time, when they say which credit is right, which is wrong, to be honestly, to be honest with you, the the question really is, who are you trying to get money from? Because whoever you're trying to get money from, whether it's through a credit card, a loan, mortgage, um, whatever credit score they're using to make their decision to give you money, that's the right one for the moment. So that's important to put that in perspective too. So hopefully this answers all your questions, and hopefully my explanation about the scoring model makes it a little clearer and understanding about who's right and who's wrong. But monitoring your credit is huge in trying to maintain your credit score and help you grow it, because obviously you need to track your progress, but at the same time too, you need to protect yourself against identity theft or any other kind of fraud, and to make sure you're checking your report card to make sure you maintain that good credit quality, strength, or health. So, but thanks for watching. If you found this video helpful, give me a thumbs up. I hate to give people too many choices, but please share and subscribe. Thumbs up, like would be great as well. But hopefully, if you like this, and please comment below. Tell me if you didn't like this video. Tell me, if there's something else you want me to talk about. Right now, I'm just going through this series of for folks who are interested in building their credit, particularly for a mortgage, but for anything else is that. So I'm going through and telling you guys the things that I do and the things I have done to get me to the 800 scores that I have. Not bragging, just telling you it can be done. And I figure if you want to know, most people want to know, what did I do to get to mines and will it work for them? I'm not doing anything magical, but credit monitoring is part of that consistent process of building my credit that has worked for me. Although I was pretty successful with it before credit monitoring became a thing, but it certainly helped because it was another guide to what creditors are expecting to reward us the most for our credit habits. So remember, better credit means a better life. So see you guys on the next episode. Take care.